Hi, I'm James Baker, founder of James Baker and Associates and international tax expert slash entrepreneur. And this clip you're about to see is from our last Ask Me Anything. If you want to ask me some questions, I come on live Wednesdays and Thursdays as much as I can. You can join with the link in the description below. I'd love to see you there, but let's get to the clip. I'm a U.S. citizen living overseas. I own 65% of a Nevis IBC. 1 year, the company has, the IBC has 100K in retained earnings or profits, net income. I understand that 65% of this becomes subpart F income on my 1040, so I owe taxes on this. What happens if I spend this money on operating costs? Can I get the tax money back? Can I claim losses, or do I have to bite the bullet and pay tax on the year it came? So here's my answer to that. When you are a citizen and you have an offshore company that pays no taxes, an IBC, an International Business Corporation, you have to report and pay tax on basically your percentage of the profits. And that's only and if this is, first of all, it's very complicated, but generally, if you owe 50% or more is when this happens. If you owe 50% or less, then it's not a form 5471 filing if you're not an officer of the company. So if you're not a director and you own 50% of the company or less, so if you own half of the company and it makes this 100K of profits every year, as long as you don't satisfy the PFIC tests, it's potentially you can leave the money in this entity without paying taxes on it in the US. But if you own 65%, then yes, you have to comply with the GILTI tax rules, and you have to comply with the subpart F income rules, and those are very complicated, to say the least. So in these situations, you really need personalized advice, because it's just one change, like who's your partner? If it's someone related to you, then maybe this doesn't apply. Or what kind of business are you doing, or how much cash do you have saved up, or are you able to change the ownership? So it's very complicated. And if you can, and generally you can't carry back losses from a CFC, a controlled foreign corporation, but they do carry forward, especially as it relates to the GILTI tax calculation. Again, these are really complicated scenarios that have a lot of nuance to it, and it deserves its own like study or memo written for it if you want to get it done really right. You can't just trust in the advice and a conversation of a tax expert reading a paragraph, because it's not going to be complete. So that's my conclusion on this one, is some tax topics, especially for citizens and offshore companies, can't be answered in a paragraph. They need conversations and research and official opinions for you to be really sure it's done right, because the penalties of doing it wrong are very costly. Thanks for sticking around to the end of the video, and I want to share some things I have to offer you. If you're looking for help expanding to the US or fixing a tax problem, the quickest way to contact us is to schedule a free call in the description below, or visiting jamesbakercpa.com/schedule. If you want to skip the line and speak with me directly, there's also a link in the description to schedule a call with me, which is another great option. I encourage you to join our Telegram and Discord groups, because in there we're announcing when I'm going live, I'm participating, I'm answering questions in real time. It's all free, and it's a quick community to engage with other entrepreneurs and people like yourself who are international and learning about this stuff. And I think it's a really valuable place to be in. At the end of the day, if you just subscribe and see me on the next video, that works too. So thanks for being here, and I'll see you in the next video.